Hi and good morning. Welcome everyone to our presentation today. Our webinar is the top 8 ACH audit findings. And before we begin, I just have a few housekeeping items to go over. First, everyone is muted to limit disruptions. If you have questions, you're welcome to share them with us using that questions feature in your GoToWebinar control panel. If we have time at the end of the presentation, we'll discuss some of those questions together. But if not, our speaker today will follow up with you after the webinar. Today's webinar is being recorded, and you can expect an email at the end of the day with links to the recording and the slide deck. And finally, upon leaving the webinar, you'll be prompted to complete a very short survey. We'd love to hear your feedback about our presentation and your thoughts for ideas on topics that you would like us to cover in the future. Our financial institutions team here at Saltmarsh provide tax, audit, and consulting services to a wide range of banks and credit unions across the United States. You can learn more about our specific services that we provide in the flyers in the handout section of your control panel. And at this time, I'll hand it over to Kristen to introduce our speaker today.
Thank you, Nancy. I am so excited today. This week, our cultural fundamental here at Saltmarsh is keeping things fun. And so I think it's very good that on this Friday of this fun week that I get the pleasure of introducing Sallie O'Brien. We here at Saltmarsh have always had a very strong ACH program for audit and consulting. And Sallie joined our team in September with a very strong background in ACH and operations, coming into her 20th year in banking operations. So she's an accredited ACH professional and an accredited payments risk professional, and came into a fourth quarter full of plenty of audit work. And so we thought this would be a great free gift before the end of the year as part of the holiday season to bring Sallie's passion and to really just to introduce you, for those who haven't met her yet of our client base, introduce you to her and let her give you a little bit of her guidance on some of her audit findings. So take it away, Sallie.
Oh, thank you so much, Kristen. That was a warm welcome. So I'm really excited to talk to you today about some of the top ACH audit findings that we see. I know going into the new year, it's really a good time to review these and kind of get a hold of them before you get your audit, see what you need to check on before you actually have those audit findings. So here we just have a list of our agenda, the areas that I'm going to be discussing with you today. Now, as I go through, like was mentioned, take note of those questions and have those, we'll take those at the end of the session. Anything, of course, that we cannot get to, I will be getting back with you on those. So feel free to get those to us, okay? So let's just go ahead and get started with stop payments. Now, with stop payments, we see issues where you have a single or a recurring stop, but maybe that intent from your customer was not followed through on. And we will discuss that a little more as we go through some of these future slides. But I'm going to explain first really why it is necessary, because we feel like it's very important that you understand. Now, there have been changes over the years with these rules. And often we see the forms are not updated to acknowledge that customer's intent. Now, where we see this issue reflecting is the area where you choose that single or recurring. And sometimes this is even left off the forms. We see that often. Now, prior to 2010, it really just wasn't needed. The rules, ACH rules, use that 6-month time frame for the consumer stop payments. However, the rules, they changed and they wanted to realign with Regulation E's stop payment rule. Now, here we see what the rule was prior to that update in 2010. So keep in mind the importance of getting that customer intent, and let's just take a look at what it should cover. Now, like I stated, this really aligns with Regulation E. Now, the verbiage was changed, which includes 2 different options. Okay, so for stop payments, they should remain in effect until that customer withdraws that stop payment order or return of that debit entry. Or in the case where that receiver once that payment stops going forward, like all of their stops, they do not want that payment to come through and hit their account. You need to stop all future payments. And we're just going to break that down just a little bit more. Now, as we discuss this, I want you to know that we often see that the customer's intent, it's been made to their financial institution, whether they want that single stop or that recurring stop, it is on the form. And the institution just needs to make sure that that intent is entered correctly within their system, and we check that. So when we are doing an audit, we look at that intent, making sure that that customer's intent is followed through with. We see that it's not often, and maybe they have a single stop payment that has been that should have been removed or expired from the core system, or maybe they have a recurring stop that has been removed from the system when it should have not been. So let's just say that your customer's intent is a single stop payment for one entry. You need to make sure that you have that removed or expired, because I know all systems are a little different when that customer has requested. So basically, for that single entry stop payment, it is your responsibility, right? And that responsibility is completed once that payment has come through or that withdrawal has been made. And that stop needs to be removed or expired from that system. Because if not, I'm sure you've had this happen. You could have something that comes in and then it's unintentionally returned, and you really do not want that either. That could be a serious liability. Say it's a mortgage payment or an insurance payment. We cannot stress the importance of making sure that the intent is really followed through with. Now, for those recurring stop payments, which we also call that permanent stop payment, these items should remain in effect until that customer withdraws that stop payment or all debits have been returned. Now, the key here with those recurring stop payments is just knowing when all debit entries have been returned. And that's not really something that is easily determined, right? I mean, how do you know when they've all stopped? How long do you wait? And how long you wait after noticing those entries have stopped coming in before you can determine that all debit entries have been returned. So Regi really doesn't provide any guidance as to how long this should be left on your system. That's really left up to your financial institution, and it's really a business decision. Okay. Now, you can see how vital that customer intent is. Now, this tells us how long we need to leave the stop payment on the system. But like I said, I will caution you about leaving all stop payments on your system forever as well. It's kind of a double-edged sword here, right? We often see that single stops are still left on the system, causing that unintentional return. We see situations where recurring stops are just on the system so long, and that could actually bog down your system too. So it's really a situation where you have to determine, hey, how long do we want to keep these forever stops on our system? Okay. And also remember, for those non-consumer stop payments, you can now process those the same way as you do your consumer stop. So that is up to you. Previously, those non-consumer stop payments, they had to come in after 6 months, fill out a new form, extend that stop payment. But now you have that option of offering that recurring forever stop as well, just like you do for those consumer customers that you have. Okay, so we're going to take a look at next the originator ODFI agreements. We're finding that some agreements have not been updated to include the language that is just required by the rules. Now, there's many pieces that should be included, and there are a select few that are actually required. And I know when we look at the agreements, there are, sometimes 10, 20, 30 pages, right? But we're going to go over those minimum items that should be on your agreements. Now, with agreements, we often see issues where language is lacking, and the agreements have maybe, you know, the minimum requirements, and sometimes we see a few areas missing. Two of those really stick out to us are the right to audit and terminate. So over the next few slides, I'm just gonna kind of go over some of these minimum requirements. Now, with the agreement, they must show that the originator has authorization has authorized that ODFI to originate those entries on behalf of the receiver's account, and that they are bound by those rules. And they must also have terms that state that the originator will not violate the laws of the United States. Now, with that, you see, you need to list any restrictions also. So like if you have PPDs and CCDs and you only allow those two types of entries for your originators, you really need to make sure that that is listed and stated clearly within the agreement. Now, from my experience, what I've seen, it really just needs to be defined. So the information may be there. All SEC codes may be listed, but the allowable SEC codes are not defined. So you need to make sure that that is completed within the agreement. That way it is clearly defined what they're allowed to do. If you choose to add to that, say you start off with those PPDs and CCDs and then you let them have TEL or web, you need to do an addendum and just update that information as well. Okay, now the right to terminate or suspend. So if that originator, say they breach the rules of their agreement, they cause you not to comply with the rules yourself. So we see this needing to be defined clearly. I would check your agreements and ensure they fully cover the right to termination, and also look at what those terms are. How long is that notice before termination? So are you giving them 10 days, 30 days? Because it's really important how that is defined. Now, of course, the time frame is a business decision, right? So recommendations, I would suggest you terminate as early as possible. Even 10 days allows you time to clear and settle the entries, have a clean break. The timing of that is essential because you do not want to take any type of loss, and also you think about reputation, right? And lastly, on this slide, we do see right to audit. We see this missing as well. And I'll mention that some throughout, because really right to audit goes back to a lot of different areas. It's essential to have that within the agreement. Being able to audit your originators is really vital to your ACH program. I recommend auditing your originators and even spot checking random customer authorizations just to verify that you understand how they're handling the process. They're adequately trained. They understand what they're originating. And I would not wait until audit time. I would probably do a mid-year audit prior to your annual audit. Just make sure you can clear up any issues that they may have prior to your audit. It'll save you some findings. Okay, so another common issue with originators is they are not reinitiating entries, or they are reinitiating entries, but you're not really clear on what they are doing. So we often see that ODFIs are not fully aware of what their originators are sending into the network. While you are probably reviewing files, you are fully aware of, of what you're seeing within that file. You see PPDs, you see CCDs, but are you fully aware of how those authorizations are being obtained? Are you reviewing those? So it's very important to be fully aware of what entries are being initiated. And I feel like this is something that goes back to when you're auditing your originators. So this is something you need to be checking on and verifying that process that they have for obtaining that authorization really determines if they are indeed utilizing that proper SEC code for how they are obtaining that authorization. Going through files, requesting specific authorization is a really good way to determine that. It's a good indicator. So maybe when you're doing that audit, review some of their files, pull some specific authorizations that they have and ask for them, and just check and make sure everything is included properly on those authorizations, or make sure that they are indeed the proper SEC code for what they are requesting. Also, when we just talked about the ODFI and originator agreement, this is just a few little thoughts on some of the issues within third-party sender relationships to keep in mind. Maybe first, making sure that that third-party sender has an adequate ACH agreement with their originators. Those agreements need to be in place. Exposure limits for their originators. They need to also request that basic information about those originators. Now, we do recommend that if you have third-party senders, you have them provide a list of their originators and their basic company information. So that's going to be what type of business are they conducting, what type of entries, the location. So you can just ensure that their originators fall within your institution's preferred customer base. Another area is third-party senders are not using authorization forms maybe that are in compliance. So or their originators cannot provide a copy of that authorization when they're requested within the proper time frame. Okay, and lastly on here we see that this often, not realizing that you also need to ensure your third-party senders have completed their annual ACH audit and completed a risk assessment. So verify this and also request that confirmation as well. Okay, so now let's take a look at returns and of course some of the common issues that we do encounter when conducting an audit. Okay, so going through the audit, we look at outgoing return files, return codes that were used. We check and verify that they are being returned properly. They express the intent of that customer. Entries are often returned with the wrong return code, return reason code. And this can be really for a number of reasons. One being that, there are so many return codes. It can be extremely confusing, or just having an understanding and knowledge of what items can be returned and when they can be returned, utilizing that rules book. This is why keeping your staff trained on the rules is very important. It will save you those unwanted findings. So one of the major return reason codes used incorrectly is going to be those unauthorized return codes. These really get confused. Like so often we see this. We see that institutions get caught up with the account type. Confused. One thing I like to mention when someone is asking me about a return code that they should be using is reminding them to follow that SEC code. So remember, when returning items, you're trying to determine if the entry is also a corporate or a consumer return. So first you need to look at that SEC code. There are corporate SEC codes, there are consumer SEC codes, and some apply to both, right? Corporate and consumer. Now, if that SEC code is corporate only, now, non-consumer SEC codes such as the CCDs, the CTXs, you will need to follow that 2-day return time frame for those non-consumer unauthorized entries. And this gets mixed up so often because they're looking at that account type. They're saying, hey, this is my corporate customer, or this is a non-consumer, but this is a PPD entry. That PPD entry has a longer return time frame. So therefore, you need to follow that time frame. Now, say it's a CCD, right? A CCD, even though it's a consumer account, that's a 2-day return time frame, right? Now, of course, if it is used improperly, that's a whole nother situation that we will get into as well. But here we see R10. Now, this one we see used incorrectly very often. R10 should be used for unauthorized entries where the customer does not know that originator. They did not authorize that entry. So in other words, that receiver did not ever have a relationship with that originator. R10 is that consumer return code that has a 60-day return time frame. And remember, these are not for those CCDs or CTX entries, although we do see that mistake often. Okay, now with the recent changes with R10 and R11, that's where we see the confusion. So like I said before, R10 is for those unauthorized consumer entries, while R11 is going to be used for entries where that receiver did not authorize that they did authorize that originator to debit their account. So they gave authorization, but maybe something wasn't correct, right? So they authorized, something's not right, maybe there was a wrong date, a wrong amount, it could be incomplete, or it could be improperly reinitiated. And like I said, these two return codes, R10 and R11, get mixed up frequently, so make sure you fully understand the differences between these two codes. And something else I'd like to note is that with R10 and R11, so R10, that originator must get that new authorization to reinitiate any entry. So if they want to reinitiate an entry for that account that has gotten an R10 for that entry, they have to get a new authorization. Now with R11, that originator can make that correction and reinitiate that entry without getting a new authorization. So they're just really making that correction and they can continue. Okay, so we're going to take a look at written statements of unauthorized debit that go along with all of these unauthorized entries and just look at some of the issues we're seeing. Now, with written statements, what we are seeing is maybe they're not updated properly. Much like we stated with the stop payments, making sure these forms are updated properly is very important. Especially with differentiating between R10 and R11. With that change, you should have had an updated form. Now, at the same time, that's not a violation of the actual rules to have this information on the form, but having this information on the form really helps your staff properly return these entries, which in turn prevents those rule violations, prevents them from maybe returning something improperly. So I do recommend that you update your forms as the rules change. Now, for the possible rules violations, I recommend, of course, making sure those forms are up to date, where the codes are being returned properly, clearly defined, just to reduce those errors, and make sure that what we see, the forms are completed before that entry is actually returned. So what happens if someone calls in and maybe you don't have time, or you're waiting on them to come in to sign the form, or whatever your process is, making sure that they have actually completed the form before you return the entry. We're going to look at that. We're going to make sure that the date is properly prior to that return. Now, with that written statement, like I said, it should always be completed before returning the entry. Now, we also see that maybe maybe that form is missing. So make sure to get that written statement before you return that entry, because that actually is a rules violation. You do need the form. Now, with the new rule updates this year, and I know there was some allowances during COVID where they allowed for no signatures, which they went back to having a signature, but now you can get an electronic or you can get an oral signature. And, that really is a time saving method just to get that return sent back quick. I mean, say if you have someone come in and they're right at that 60 days, you want to get that returned as quickly as possible. So an electronic or an oral signature might be something that is something you want to take advantage of so you can get these entries returned timely and save some of the hassle. And take away from some of that paperwork, especially if you're doing things electronic. Now, you still have to provide that information if requested, so keep that in mind. If you're using DocuSign, whatever you're using, recordings for oral signatures, you will have to keep that information as well to provide if requested, okay? Now, not only should that an authorized return be processed timely, but the credit should be provided as well. So make sure you are returning the entries within the proper time frame. You're also providing the credits in a timely manner. Okay, so SEC codes, we also see that the incorrect SEC code has been used for an entry. I also have had instances where the ODFI, they're not auditing their originators, they're initiating those PPD entries, utilizing maybe their website or telephone to gather an authorization, maybe because that originator is not fully aware of the rules and how it works. So they think they're actually doing their customer base a service by giving them other options to get that authorization while still, using PPD. Now, of course, they're allowed to utilize PPD, but those entries should have been a web or a tail, and maybe they're not allowed to do that. So it's really important to that they're familiar with what the rules are, so they are processing these entries correctly, and what they're allowed to do. So that goes back to training. Now, it is extremely common to see that originators may use the incorrect code by mistake. Some SEC codes, they get mistakenly used more often than others, but mainly it's due to convenience. And it's not only for the originators, but we also see this with internal origination from the ODFI. The SEC code should always match that form of authorization. So if that authorization is over the phone, it should be a tail, right? So keep that in mind, that there are now new updates regarding those standing authorizations as well, and subsequent entries. So if you are planning on using and utilizing standing authorizations, make sure you understand what is going to be required of you when you do that subsequent entry, because you still have to follow the rules with the subsequent entries as well. Okay, now this is a very, very common finding. Now, PPDs to non-consumer accounts. So this is very common, like I said, easy to mix up. First note, no business is going to be upset or complain when a PPD entry goes to that non-consumer account. We see so many internal, external origination entries coded PPD while going to a business account, so that non-consumer account. Especially utility companies, loan payments. And while no business really is going to complain, if that entry gets disputed, that originator gave them a 60-day right of return. And a PPD going to a business account is treated the same as a PPD going to that consumer account. As a consumer transaction. So like I stated earlier, the SEC code tells what the return time frame will be, and if you allow PPDs to go to non-consumer accounts, you're really giving them that full benefit of that consumer 60-day right of return. So keep that in mind. And also, let's just say you have an originator initiating entries for, say, it's a utility company. The utility company has consumers and non-consumer customers, right? So they have businesses and just their normal households. So you can imagine that bill for the non-consumer for that business is going to be a significant difference from a household utility bill, right? So that business disputes that utility payment that came out of their account. They can go back 60 days instead of 2 days because of that PPD consumer SEC code. So just keep that in mind, that just is giving them longer, and it's just your liability increases with that also. Okay, now we also see CCDs to a consumer account in error. And as you probably know, a CCD, like we keep mentioning, is a non-consumer entry. But suppose this happens and the entry is disputed as unauthorized. In that case, the entry should be returned as RO5, which is that unauthorized debit to that consumer account using that corporate SEC code. We also see return code RO5 used in error for consumer returns that should have been either maybe in R10 or R11. So just be mindful and make sure your staff really is fully aware of what return codes to use and why they're using them. Okay, so debit authorizations. So we're going to look at some of the common issues that I've seen and we see often. Often there are missing areas from that debit authorization form. This is very common. Areas that need to be even made clearer for the receiver. Two items that I see most frequently noted are the frequency of that payment and the amount of that payment. Okay, now the frequency is important because it provides the timing of the debit and how often that debit will occur, whether it be daily, weekly, monthly, annually. Now, this is important. Say that customer disputing that item. They may be disputing the timing of that debit. So if debiting early is it's going to be a possible rules violation, right? So your forms and your originator authorizations for both your internal and your originators, they just need to be very clear on the timing. Now, another missing area is the amount. This one is very often. So as with the frequency, the amount, it provides the authorized debit amount. So if you're debiting the incorrect amount, this is a possible rules violation. So I would make sure to either have the correct exact amount, or you do need to notate how that amount is calculated. So if the payment varies, so say it's a utility payment, it's not the same, it's an adjustable payment, like a utility payment or a loan payment or a mortgage payment, it just needs to be clear how that amount is determined. It doesn't have to be exact, but it needs to say how they should determine that amount, what that receiver should expect. Okay. So here, this just shows you what the rules require a debit authorization to include, and this is at a minimum. Now, another area I do want to mention, I'm not going to go through every one of these, and just the ones that we see most often is going to be that revocation language. Now, the information sometimes is missing, and this just gives instructions to that receiver how they can cancel future payments and when that receiver needs to contact the originator so that receiver can actually get that entry stopped timely. So review your debit authorization forms and your originator forms, and just make sure that all information here is listed. Okay. And lastly, on here we have tail authorizations, and this is just another big item that we see. Now with tail entries, the major issue is the need for that required information in a recording. Usually when I get the forms, they're fine. Usually they have the information in, but with the recordings, we often see that there's no script. The customers are not providing all that necessary information for that authorization. So there's no authorization, there's no clear agreement. There may not be a recording at all, or we hear the conversation, but that minimum information that is required is not included. So I would make sure that there is a clear script for them to go by. Say you have people collecting for loan payments. You want to make sure that they have a script to go by that includes the minimum information. Now, for those single tail entries, remember that either a notice must be provided or that recording of the authorization should be made. For recurring, you need to have both. So just make sure you have both that written notice and the recording, okay? I also would like to point out, maybe to pull out a section of these to review. Again, not at audit time. I mean, we will do that, of course, but maybe mid-year just to do a check-in and make sure that, you know, that they're going by script and everything looks good, especially if you've had findings in the past. I will just verify that. Okay, that brings me to the end. Do we have any questions?
Yes, so we did get some questions that came through, and so I'll just read one of them for you right now. What are you looking for in a audit with Nacha's new rule requiring us to monitor returned micro entries? And then they also added, for example, do they need to be on a separate spreadsheet from our regular returns?
I mean, that's going to be up to you and how you want to monitor those. If you want them on a separate spreadsheet, if that is helpful for you in pulling those entries or reviewing those easy, you know, just that part is up to you as far as monitoring them. Now, as those come in, you are going to look for anything unusual as those are returned, just making sure that your originator is up to par and they're not originating a bunch of entries that they shouldn't be. So this is going to give you a good tell-all if they are properly doing what they need to do to get the information. So what we probably would be looking for is, do you have an extreme amount of these coming back? Why? And what's your process if you do? So if you have an originator that or yourself, you know, initiate these micro entries and you have a large number coming back, why are you having these come back? Or what's your process if this happens with that originator? So I think that would be the main thing that we would be looking at. Just making sure there's no fraud.
We don't want that.
No.
So that is all the questions we have for right now, but I know some people will be emailing us some questions separately about their specific financial institutions, but oh, Kristen, yes.
Yeah, I put it in the chat. I got an email, one came in. This is for a post-no ACH credit account that banks allow or have their customers, like attorneys and title companies, who don't expect to get ACH transactions. They only want wires. So they sign an agreement in advance to post no ACH credit. The agreement says that the bank will return all the transactions as refused by receiver. I think the question is, do they need a stop payment form in addition to that block all ACH request forms to return the item? I'm assuming they're returning the item stop payment.
They're returning the items. If they're returning it stop payments, then they need to have a form in place. Yes.
Could they return it as item refused?
I mean, technically, I don't think that, I mean, is it coming into an account that is a non-transaction account that they can say that? Then, I mean, if they're wanting to stop all future payments from a specific company, they need a stop payment in place.
Yeah, these are not from a specific company. I think it's interesting to have this this offering with all the fraud that's going on. So
I do
I guess,
too. I think that it really sets them up for some issues in the future because it's making them responsible, fully responsible for checking all entries coming in and out of an account manually, which can easily be, you could easily have an error when you're doing that. So I think that stopping it, if they know in advance, but if they don't know in advance, you really, that's what a stop payment is. You do the stop payment, prior to an entry coming in. Once it comes in and you don't want it to come in anymore, you can do the stop then for future payments. So
I think they're setting it up on their core system to just not allow ACH, almost like you might for a GL or a loan or a non-transaction.
Yeah, it needs to be more of a non-transaction type account, an account that doesn't allow ACH entries.
Okay. I thought I remember that. You're like, by law, you have to allow ACH to transaction accounts. So I don't know. This is a good one. So
You run into issues when you pick and choose, but you don't have that restriction really set up for the account in the first place, because you're putting yourself fully liable for manually checking. And I feel that's where the big issue would be, because if something hit, you weren't there, it caused an issue. You said you would stop it. It's just a can of worms. You probably don't.
Well, they did, as Nancy suggested, and emailed that to the bank advisors at saltmarshcpa.com. So feel free to open that and look at the actual agreement that they sent. I like thinking outside the box, and I think, this was great. I appreciated especially your comments about periodically checking yourself so that you're not surprised at an audit or an audit finding. Especially when you're dealing with third parties, originators or otherwise. So I enjoyed it. I hope you all did too. And please just reach out if you have any questions.
Thank you.
Or Sallie can help you in any way. Everyone, have a great day.
Thank you, guys.